off. Americans return to space as Discovery clears the tower.
Welcome back, TTMTrades. So look, today I really want to talk about the market. We're going to talk about a couple things. We're going to talk about the SPY. We're going to talk about the VIX. We're going to talk about the overall setup of the market in the 11 market sectors, along with a couple of stocks, because the entire market is set up the exact same way. Every single stock, ETF sector you look at, a majority of them, 90% of them are all set up the same way. And then we're just going to talk about my one in particular play that I'm going to play on this market, okay? But as far as the SPY, the bottom is in. The bottom is in, okay? And may not be a permanent bottom, could just be a temporary bottom, but nonetheless, the bottom is in and the market wants to rally, okay? So, how high the market rally, that is yet to be said. There's still a lot of overhead resistance. So, let's go ahead and jump right into it. Let's talk about the SPY, okay? So, looking at ticker SPY, right, on the weekly chart, as you can see here, had that dip down into this invisible bottom. That's why we need to go out to the monthly chart. So looking at the monthly chart, had the strong uptrend again. That middle BB always showing that line of support was finally violated. It dipped down to 218, and then some immediate buying came back in. As you can see, as we're sitting in the month of April, that bottom one standard deviation Bollinger Band is holding right at 256. As the market begins to try to recover. Okay, still has overhead resistance at 275 and 295 on a monthly basis. Now, as you can see here on the weekly chart, that 275 resistance correlates with the bottom one standard deviation Bollinger Band on the weekly chart. Now, again, if we get above that bottom one standard deviation of 275, that brings the weekly chart out of a downtrend, and that's the chart that we need to see currently recover and get above 275. But right now, the monthly chart has pulled itself out of a downtrend. Weekly chart is still in a downtrend setup. It needs to get above that 275. And as you can see here on the daily, we came out of that downtrend late March as we broke above that bottom one standard deviation Bollinger Band, pulled back, actually tested it, and now we're rallying back up into that middle BB. Okay, now moving forward, what do I think? Okay, now my personal opinion, just looking at the setup on a daily, the bottom is in and the market wants to rally. I've seen this setup many a times on intraday charts, but now it's starting to play out on the daily. So as you can see here, the Shande trend meter is very good for identifying trends. So as you can see here, as you continue to hold in the green, you can see that you're in a strong uptrend, and we finally violated that and fell below both our averages, and then we moved down into this downtrend into the red area. Now, as you can see here, we're currently breaking out of that. We came out of that downtrend area, and now we're crossed above our short-term average of 30 SMA, and you can see we're kind of breaking above that short-term average, and we've pulled ourselves out of this downtrend, as you can see here. Also, looking at the RSIs, finally crossed above its short-term average, as you can see here in this area. Fell below a short-term average. All right, anytime a stock or ETF is in a very strong uptrend, it'll hold above that 40 to 50 areas. You can see here, finally violated that area, and then it was below its long-term average. You can see here that green line, but finally it broke above both its averages, and then even on this pullback here, as you can see right here, it hit its short-term average for a test of 2 times, and then finally bounced back up to show that the short-term momentum, as far as what the RSI displays, is in play. Same setup here. We was in that strong downtrend, got denied by that one standard deviation Bollinger Band there, and then it continued this downtrend. Finally broke above it here, and then on the pullback, tested it here, found support, and now we're rallying back up again. Okay, so PMO is also flattening out. And then you can see that the momentum here on the Bollinger Band width, as you can see here, which was moving at a high rate of speed, is now finally pulling back to show that the SPY is consolidating in this general area right here, and the volatility is beginning to slow down. As you can see, the SPY is starting to fall back below its averages as far as the Bollinger Band width. And that shows the Bollinger Bands beginning to consolidate. Okay, so all the different things we're looking at: current support 240, current resistance sitting at 267 on a day-to-day basis. Now, looking intraday, what do we see happening here over the next couple of days? Now, I kind of foreseen this rally happening, and I know, news and all that. It's kind of weird because you can see things play out on the chart before the actual news come out, and you see the play happens. Okay, so I don't, it's just weird like that. You can actually see the setup before it happens, and then the setup happens, and then it's, because of some news or something like that, it's already like the move was pre-programmed into the chart to happen. It's just some news magically went along with it. And what I mean by that is, looking at the 30-minute chart, overall the 2-hour chart, as you can see here, has been on this downward momentum ever since late February. All right, when we finally fell below the 150 SMA, as you can see here, and then each attempt into that middle BB was a failure, and we stayed below the bottom two Bollinger Bands to show that strong downtrend. All right, as we broke above that bottom one standard deviation Bollinger Band, the PMO finally had its crossed over and moved back above both its averages. I don't know why this thing is blue. Let me come out of that. There we go. All right, so let me show you what I'm talking about. PMO, I've changed the settings on the PMO to smooth this thing all the way out to null and void all small signals. So the PMO is just strictly helps me identify the trend with what I see on the Bollinger Band. So this entire wave down right here on the PMO, as you can see here, is below both its averages, the yellow line and the green line. Showed me that both the short-term and long-term trend of this on the 2-hour chart was in a very bearish state. Okay, now once I got the crossover on the PMO, as you can see here, as I mess with stock charts tools, okay, once we got the crossover here, then I kind of knew that the entire momentum of the SPY shifted. Okay, now what I wanted to see was a possible double bottom come into play. All right, and as you can see here, the PMO is still holding above and it's fully crossed. We're still in bear territory. As you can see, we're below the zero line, but it's above both its averages, the yellow line and the green line, and it's holding steady as it began to flatten out to show the overall trend slowing down due to this drop right here. It immediately got it bouncing. Now it's continuing upward to head back towards positive territory, which is very bullish. Okay, now on this bounce here, okay, one, for seeing this drop coming, and two, for seeing this bounce coming. All right, and what I mean by that is if we go to the 30-minute chart, as we break this down on an intraday basis, right, as I begin to see the PMO turn over to show that the overall trend changed, and we did finally break above this one standard top deviation here, as we kept getting rejected on that downward trend here, rejected, and then we finally broke out of that downward trend, and the PMO crossed over. That let me know that the overall short-term momentum shifted into the bulls territory on the 30-minute chart. Now as the PMO began to flatten out here, that's when I noticed the trend was beginning to weaken, as it wasn't continuing and it was converging on top of its averages, and it was also struggling to break back out on the bands, as you can see here. So that's when we took puts. Now the overall market is moving with the overall indexes, so I didn't take puts on SPY, I took puts on Uber. All right, because Uber is following the SPY tit for tat. So we took puts on Uber at $1 with an April 17 expiration. We got the drop here. I think the Uber puts ran up to $2.46, and I was gonna hold those Uber puts going into today. I knew we was gonna get a short-term rally, because as this upward momentum on the 30-minute chart, and Uber set up the exact same way. This is why I'm showing. Matter of fact, let me just go to Uber chart, because Uber is performing exactly like SPY, but I'm gonna show you on the Uber chart. So same thing with Uber. We took $23 puts with a 23 strike price puts on Uber, because we begin seeing the momentum slow down from this upward breakout on the 30-minute chart. As you can see here on SPY, same thing, upward momentum begin to slow down. Uber, upward momentum begin to slow down. So we took puts on that. Once we finally got the crossover on the trend, the long-term trend, as far as the 30-minute chart crossed over, then we knew we was going to get a downward drop. We got the downward drop here with the Uber puts running down to 2167, And with that being said, the Uber puts went from being worth $1 to up to $2.46. Now I knew we had a short term rally coming because one, the 30-minute chart was oversold, and then the 5-minute chart began to rally on a short term basis. So what I mean by that, if I pull up Uber on a 5-minute chart Friday prior to close, I began seeing the PMO here Friday, April 3rd. I started seeing the PMO cross back over like this, showing me that the bottom was inputted here as the trends, as the RSI began to trend over its averages and the Shande began to trend over its averages. So me seeing this, all right, and the PMO began to trend up, I knew we was going to get a short-term rally here on Monday. Now, I didn't think the rally was going to be a gap up like this and then to continue like this. As you can see, the SPY did the same thing. Uber followed suit. All right, so those dollar puts we bought on Uber that was worth $2.46. I should have went ahead and cashed out on Friday at 2 to 3 p.m. when I began to see the PMO begin to reverse and then the price action begin to hold above its middle BB, but I didn't. We end up selling those puts for like $1.89. Okay, so this rally right here shook me out of that position. All right, so with that being said, let's go ahead and get off of Uber. All right, looking at the SPY. All right, kind of knew this reversal was going to come because as we saw on April 3rd, the SPY began doing the same exact thing. All right, the PMO, which was showing this downward trend here, April 3rd, it started to cross back over here, and then the averages began to converge back above their short and long term averages. And then finally, you get the news about the COVID-19 peaking in certain states, and you get this huge rally right here on the 5-minute chart. All right, now moving forward, what do I think is going to happen with the SPY? All right, the 2-hour chart is set up very bullish, as you can see here. All right, it's above both its averages, fully crossed over, and it's heading into positive territory. It needs to get into above that zero line, and it needs to get above this 150 SMA. So I think we still, I think we're going to kind of consolidate in this area of 254 up to 260. And the reason I say that is because you get the strong rally here. Looking back on the 30-minute chart, this breakout here, again, 30-minute chart still bullish above its zero line on the PMO, fully crossed over above its 150 SMA. As you can see here, when it finally broke above it to come out of that long-term downtrend, it found support on it twice and then finally broke back out. All right, but the 30-minute chart is oversold. Okay, so I do think we get a short-term pullback here. Now, where do I think that pullback is going to happen? I think it's going to pull back. SPY needs to pull back to about 254 to consolidate. All right, once it pulls back to 254, which we'll see here on the 5-minute chart, it's crossed below both its averages, kind of flattening out, but I don't think it's going to get back above its averages. I think it's going to continue to go downward as the momentum is beginning to slow. I mean, you got this end of day last minute rally, which I don't think will continue tomorrow. I think the 5-minute chart is going to continue to slow, showing that the overall short-term trend is reversing. We're going to get that pullback to 254, as you can see here with the 150 SMAs on the 5-minute chart. That's the 30-minute chart's middle BB. As we zoom out, 254. So I believe we get a 254 pullback here on the 5-minute chart. When that pulls back, the PMO is going to hit right around that zero line and begin flattening out. Once I see the PMO begin to flatten out right around that zero line and on top of the 150 SMA, then I know that the 30-minute chart is now consolidating and is preparing itself for another breakout. All right, but overall, the market wants to rally. It wants to rally, and the temporary bottom has been established. Okay, the entire market is set up in this W pattern, as you can see here, where you get the first leg down, a rally to attempt the middle BB. I think you get another leg down, and then you get a strong run up to reattempt the 150 SMA, which has been holding the market up for quite some time. As you can see here, 1, 2, 3, 4, 5. Broke through it, tried to rally, got rejected, and now it's fell back down. So I think the market wants to rally and retest this 300 area, which I think that's where we're going to go. Okay, and that's the SPY. Now looking at the VIX, which is the volatility index. Okay, a lot of people call this the fear index. What they do is they take put and call options on indexes that deal with the SPY, right? And based on those put and call options, they look to see pretty much, I think it's about 14 days out and 44 days out, to put the put call ratio. Okay. And this is how the VIX is created. Okay. Now looking at the VIX, all right, we go to the 2-hour chart. You can see here the VIX begin to pull back to that zero line, and then all of a sudden it begin to flatten out and converge on its averages, and then you get this strong run up on the VIX. All right, and for those of you who don't understand the VIX, I don't want to go too much in detail, but anytime there's risk in the market, and risk is identified as volatility. Okay, so risk and volatility go parallel. All right, when there's a lot of volatility in the market, right, big hedge fund managers look for ways to hedge their portfolios. All right, the way they do that is they sell a lot of puts. Okay, by them doing that, they hedge their portfolios, and then that is reflected in the VIX. All right, when there's a much higher put to call ratio, all right, then that is reflected in the VIX, and then you get this rally in the VIX like this. Okay, so when you had that drop in February 21st, you could see there was a lot of puts being flooded into the market, which you get this strong rally on the VIX like this. This is why it's called the fear index, because if people are hedging, big hedge fund managers are hedging their portfolios with a lot of puts, then you get this rally on the VIX like this, and it kind of moves inverse to the SPY if you go and pull both of them up. All right, but if you look, the VIX begin to cross down and below its averages here on the 23rd of March, and you can see that that put to call ratio is kind of fading, and you can see the fear is kind of leaving the market. All right, now the VIX is still set up in a very bullish manner. All right, it's still in positive territory, although below both its averages. All right, so with that being said, just from looking at this, you can see on a short-term basis that a lot of hedge fund managers aren't really hedging. Well, they're probably still hedging their portfolios, but not as tough as you see the VIX begin to pull back. Okay, so the VIX is definitely something we want to keep an eye on. If I begin to see the PMO get close to the zero area, and we'll pull up the VIX on the daily, as you can see here, as it's beginning to consolidate. If I see the VIX begin to pull down here on the 2-hour chart right around the zero area and starting to flatten out, then that lets me know that investors, not investors, but big time hedge fund managers and everything, may be getting ready to re-hedge their portfolios again. And this will give us fair warning as we watch the VIX, and if it begins to flatten out to try to make another run up to the upside, then that gives us fair warning that big hedge fund managers are expecting more volatility in the market for a possible drop. Okay, so we'll keep an eye on the VIX and the SPY. All right, now let's look at some of the setups on the overall market. Right, if we pull up the 11 market sectors, they're all set up the same way. They all have this W pattern going, all finding support on their short-term averages. All of them have pulled out of this downtrend, crossing above the 1 standard deviation Bollinger Band, finding support on it, and then starting to create another leg up. All right, so as I scroll down, communication services, as you can see, same exact setup, came out of that downtrend, found support on that 1 standard Bollinger Band that it broke above, and now you get this gap up this morning, which I think will begin to pull back as it consolidates. The price action consolidates in this area and creates a bottom before it tries to make a strong run up to the upside. Communication services, consumer discretionary, same thing. Broke out of that downtrend, found support on this 1 standard deviation, rally this morning, beginning to cross above both its short-term averages, with the PMO flattening out in the Bollinger Band, with showing that the volatility is subsiding. And when volatility subsides, that shows that the risk in the market is beginning to leave temporarily, as we say right now. Okay, as you can see here, consumer staples is same thing, broke out, found support, actually broke above his middle Bollinger Band, which is very bullish, and it's already beginning to cross over. The energy sector, which has been getting battered pretty bad, broke out of its downtrend, found support on that middle BB, and now it's consolidating this area to try to make a rally. So every sector, as you can see here, W pattern is all setting up the same. Above its averages, W pattern, that's the healthcare sector. Industrial sector broke out, W pattern, finding support. Materials broke out, W pattern. Real estate broke out, W pattern. Every sector is doing the same thing. All right. Technology broke out, W pattern. All right. So I do see a rally happening here soon. As you can see, utility, same thing, broke out, W pattern. All right. So all 11 sectors are doing the same thing. All right. So the overall market is beginning to reverse and the temporary bottom is in. Okay. Even some of the options that I own on a long-term basis, and the ones that I do want to own on a long-term basis, as you can see here, they're in my option play category, and they all have the same setup, right? AMD came out of that downtrend, broke out, found support, one standard deviation. Alibaba broke out, support, on a one standard deviation, heading to the upside. All types broke out, support, right? So you see this pattern on every one. And some stocks are even stronger. Amazon, pretty much making a V-shaped recovery, ran down. Looks like an inverse head and shoulder, honestly. Run down, there's the first shoulder, the head, pull up, another shoulder, and now it looks like it wants to run back to the upside on Amazon. All right. Amazon looks very bullish. Bank of America broke out of its downtrend, found support on this one standard deviation Bollinger Band, and now it's starting to rally. Okay. Same thing here with Berkshire, Beyond Meat. You keep going, it's the same pattern as I scroll down. Boeing, Canopy Growth, Weed Stock, and I could just keep going and going and going. All right. Caterpillar, it's straight V-shaped recovery, hasn't even pulled back yet. CVS, Dell Technologies, all right, pull back. You can see the bands begin to constrict. Look like Dell wants to break out to the upside. In phase energy, so on and so forth. So you have a W pattern in the market right now. All right. Every stock I go down. All right. Well, LCK just got his ass whipped. I gotta look at the news on that one. What's going on? Right. Lyft, the whole nine. You have a W pattern in the market, and so the market wants to rally. All right. So my play, what do I plan on playing? All right, and I'm gonna take June calls on this. Bank of America, as I pull this up, because I do see a nice short-term rally in play for the month of April and possibly going into the month of May, depending on if the rally happens suddenly or if the rally takes some time and want to make a leg up intraday and then pull back and then make another leg up intraday and then pull back, or if it just wants to hurry up and have a strong rally and then reverse. Okay, because again, a rally's in play, but I highly doubt we get back to the highs of the SPY and then continue an uptrend. I highly doubt that happens. Okay, the market still has to contract and continue to take in the data. Okay, but Bank of America, I really like Bank of America's setup. Okay, if you go and look at Bank of America June puts, and I'll pull up the Bank of America on the daily chart, I think the market really wants to test on every chart. When I go back and look, a lot of stocks want to retest their strong resistance area. Okay, and I think Bank of America really wants to push this $27 range and then test 150 SMA. All right, if we get back above the 150 SMA, and this is on any stock, including the SPY index, if we get back above the 150 SMA, then I know the market has returned back to its normalcy as far as its bullishness. Okay, but for now, I think the market really wants to rally back into that 150 SMA. We pull back to the SPY. 150 SMA is a big deal for the SPY because, again, back in late 19, this is when the trade wars was going on with China, when it was a big deal, and you can see 300 was a very big line of resistance for the market to get above, right? 289, 297, 298, and then finally broke above and rallied, and then we broke through that and had the strong rundown due to COVID-19. So now SPY begins to consolidate in this area and hold above its bottom one standard deviation, which is current support. I think we're going to get a strong rally to the upside, and we're going to test that 150 SMA sitting at 301. Okay, 275 is still a strong line of resistance, 270 to 275 where the weekly chart is at on SPY. But I think the entire market wants to retest 150 SMA. So going back to BAC, Bank of America, I think we get a strong rally here once we get above that $23 range, which you can see the resistance is currently being created as it had this rally up to 22.95 and then it pulled back for a W pattern. And you can see the middle BB kind of adjusting to that last line of resistance, and you can see the one standard deviation begin to curl to adjust to this last line of support sitting at 1950, right? So $20 and $23 is support and resistance right now as Bank of America consolidates intraday right in this range. So if we zoom into the 2-hour chart, you can see the consolidation happening. A strong leg down on the PMO below its middle BB, unable to get above it. And then finally gets a crossover in the short-term average and then breaks out to the upside, converges, and now starting to move back to the upside, just like the SPY is doing. But you can see the consolidation happening right in this window of $20 to $23 right here on the 2-hour chart. All right, so what I'm looking for is for the 2-hour chart to continue its PMO to continue trending upwards to show that that momentum is in the bull's favor as it tries to come out of this bear territory. Once it comes out of that bear territory, then I'm looking at that $23 push right here, and then we're looking at 23, 27, and 30. All right, so I'm playing Bank of America calls. I think that was right at $30. Let me pull it up. Let me pull up Bank of America calls real quick. Give me a second, y'all. Let me log in real quick. Because I really think this is gonna be a big play. I honestly do. If the market is gonna reverse the way it's showing that it's gonna reverse, I think this will be a big play. So right now I'm looking at June calls on Bank of America, 74 days of expiration, and right now I'm looking at the $30 calls. $30 calls, right? What's crazy is I look at the 150 SMA, which is currently sitting at 30.36, which I think is going to be a strong line of resistance. I think the entire market wants to rally and retest the 150 SMA, which is what I trade, and or the 200 period moving average, which is what a lot of people trade. It wants to get back in that area and test it, which I think would be a strong line of resistance, and then the market will finally reverse. But look at this, 150 SMA sitting at 30.36. If you look at June calls for $30, open interest is 69,000 call options, contracts. 69,000 open interest call options for June 30th. All right. And just looking at the price on the June 30 strike price, it's sitting at what was the last bid? It's sitting at 13 cents right now. Sitting at 13 cents right now. Right? What's even crazier is, and these are more riskier plays, if you go to the $35 range, which is where it peaked out at for Bank of America, you can see $35 has 81,000 open interest call option contracts. So there's some pretty big bets that the bank of the market is going to rally back to these highs. All right, so risky play. I'm not playing it to get intrinsic value. What I'm gonna do is I'm gonna play the possible. I'm probably gonna play the $35 calls on this one, and again, I'm not looking to gain intrinsic value. What I want to happen is the $35 calls are sitting at 5 to 6 cents right now. So I'm gonna load up on those calls at 5 and 6 cents as the market consolidates. And what I want to do is I want to sell the extrinsic value when the market rallies. And what I mean by that is what I'm doing is I'm buying the delta, gamma, theta, vega, the implied volatility right now. And when the market rallies, I'm going to sell that same extrinsic value to the next person that wants to buy it, which is the delta, gamma, theta, vega, and implied volatility as it increases. Okay, and we're going to unload these $35 strike calls that's sitting at 5 to 6 cents right now. Hopefully we can unload them later on at hopefully 50 cents, maybe even $1, depending on how fast this rallies. But what I can tell you right now is, with the Bollinger Bandwidth pulling back like this, it's telling you on a day-to-day basis the market is consolidating. And I tell people all the time, where there's low volatility, high volatility follows. It's cyclical. Low volatility here, high volatility, breakout. That's back when that was high volatility before the market got crazy. Low volatility here, high volatility, breakout. Low volatility, high volatility, breakout. Low volatility, as you can see here, high volatility, breakout. So again, we're getting a pullback as the market consolidates in this area. And then once it converges and gets below average, I think a lot of buying is going to come in, and it's going to surge the market to the upside to reattempt that 150 to 200 SMA, whichever one you trade. All right, but that's my play. That's my view on the market right now. If you are playing puts, I would say play them short term to the downside, and then go heavy back to the upside as the market wants to rally to retest that 150 SMA, which is what I trade. Okay. Till next time, TTM Trades, trade safe. As you can see, the market has created a bottom. Whether it's a temporary bottom or not, a bottom has been created. So you need to trade with the overall trend of the market. But till next time, TTM Trades, you got questions, the Discord is down below. Hit me up. Trade safe, position sizing, risk management, all that. All right. And what I want you all to do before I get off of here, find you one stock to trade. One stock you want to own for the long term, and trade that one stock. Trade the ebbs and flows of that stock, the ups and downs. Okay. You'll come to find out it's a lot easier when you only trade 1 to 2 stocks, because you can pinpoint the up and down movements like it's second nature, because you're so used to trading it. So find you that one stock. All right. Till next time, TTM Trades. I'm out.
Houston, Tranquility Base here. The Eagle has landed.